In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm Rick Everett, your host and financial advisor with Market Advisory Group, along with a full complement of panelists today to include financial advisor and partner at Market Advisory Group, Jonathan McCoy. With Market Tax Services, one of our tax professionals, Susan Curtis, health insurance advisor with Market Medicare Advisors, Mark Benefiel, and from Eidelman Law Firm, estate planning attorney, Doug Chowder. Welcoming everyone. Today we're addressing the specific concerns that a market downturn could wipe out or derail your retirement plan. Jonathan, at Market Advisory Group, we are regularly meeting with people who are concerned that an unpredictable market could have unplanned negative impacts on their ability to retire comfortably and stay retired. You have an example of a couple who's been managing their own investments with exactly that same concern. Share with us if you would.
Yes, we talked a little bit about Lou and Barb in this circumstance. Quite frankly, the first part of our conversation was they didn't feel like they had saved enough for retirement. So we had to talk more in depth about what is the definition of enough. It's different for everyone, right? We've got to talk about overall retirement budget and expenses. What are your Social Security benefits going to pay? What are your other expenses involved in terms of taxes, Medicare, so on and so forth. So it involves a lot of education through this consultation process. And ultimately, Lou and Barb in this circumstance had decided after 2008 that they were going to have the strategy of when the market begins going through a downturn, move some of the money in their retirement accounts to the sidelines into some safe, sort of stable value money market type investments until they felt more comfortable with the current market environment. And it's a risky strategy from the standpoint of nobody, even the best financial advisors in the world, can time the market that well, especially if you're looking to at least keep up with the pace of inflation. So they had decided on that strategy. It made them feel more secure in mitigating risks on their retirement assets. But we had to dive into, is that costing them too much long term?
So in this case, how did the consultation process play out?
Well, we had to do a deep dive into their debt situation, how much money did they owe, and to who, and at what interest rates. What were the rates of return on some of these guaranteed investments that they had been using since the downturn of 2020? That was a big enough concern for them that they moved some of those assets to the sidelines again, similar to after 2008. I had to spend some time exploring how they came to the decision of moving in and out of the market the way that they had. And really, to get to that, we have to ask the question, what purpose is this money going to serve for you over the long term? That's when we started discussing, okay, it's not really money that they're expecting to need to live on from an annual income basis. It's more of that cushion. If and when those higher end-of-life medical expenses or long-term care expenses come up, or any other type of financial emergency or unexpectedly high expense, replacing an HVAC on the house, or you need a new roof and the insurance company won't cover it, those things will happen. You'll need a new car. You might need to help the kids out with, certain expenses. So we had to understand what were they actually going to use the money for before we could shoot at a defined target with how that money should be invested.
So with a moving target like that, so to speak,
yeah.
Did you discover anything unique about their particular concerns with the market?
Well, it was just that they didn't intend to use the money specifically in the first several years after they retired. It was more that long-term safe and sustainable growth to outpace inflation to serve the purpose of offsetting some of those longer-term costs of, what if one of them or both of them winds up in a nursing home? So we talked a bit about that, but then we talked about the fact that, like most of the folks that we talked to, the majority of their retirement savings had not had the taxes paid on it yet. And we identified some tax savings and planning opportunities that involved getting Susan into the conference room with Market Tax Services to discuss, once they're both retired and they see that dip in income, not earning their paychecks anymore, do they have the opportunity to mitigate the tax impacts on those retirement accounts over time?
Susan Curtis, tax professional with Market Tax Services. Jonathan just mentioned one of their main concerns was the likelihood that taxes would go higher throughout their retirement. Do you often join in the early meetings with folks that the Market Advisory Group advisors are just meeting for the first time to address their tax situation?
Well, we see these people all the time where they need help with adjusting their withholdings. We may not be able to get in there right away and do huge tax planning, but we can at least get the conversation started. It isn't just about saving those pre-tax dollars. It's about when do we start to plan? The sooner the better, because if you wait too long, then you find yourself in a situation where you might be bottlenecking.
Jonathan, I know that you've said in the past that the best time as far as tax planning goes with advisory clients that are already on board with Market Advisory Group is November or December, because there's still time to right the ship. But each situation with new clients coming in is different, and there may be a need for a tax advisor right out of the gate.
Yeah, that's exactly right. At least for analysis of what is the current situation and what are the long-term impacts of those taxes. Because frankly, we talk about this in every episode. People don't know what they don't know, and that's what they're here to discuss, because oftentimes you don't have the tax advisor giving the financial advisor the direction to ask the right questions in those one-on-one meetings. And we find that's a huge missing piece to the planning process, just generally speaking about, even though, as Susan mentioned in Lou and Barb's circumstance, they're not going to immediately be taking advantage of things like moving money out of pre-tax accounts to tax-free accounts and executing some of the more sophisticated strategies that we use from a tax planning perspective, but it's only going to be a couple of years off. And don't we want to know the costs of what that plan is going to be? And I don't mean the costs of necessarily paying professionals, it's the tax cost. How much is the IRS is going to charge you, and are those costs warranted from the perspective of the longer term cost savings on the tax management strategy, especially after they retire in this circumstance? So there's no better day than today, regardless of what month of the year that it is.
Tell me if this is an accurate statement, Jonathan. Tax planning is most effective if you can leverage years of advance planning.
100%. We meet with folks all the time after they come, especially to our tax presentations. I feel like I'm behind the 8 ball on this Roth thing, or my employer only started offering this variety of contribution options just very recently. So a lot of people feel like they're behind the 8 ball, especially if tax rates go higher. There's no better day to plan than today, and the more time we allow to go by, especially year after year, and as tax rates begin to increase, we're missing the boat. And if you're waiting until tax season to sit down with a tax professional and review your tax situation, it is too late, because you can't do anything significant to affect your taxable income situation from the previous year.
When time is of the essence and every second counts, you don't want to be slowed down by having to tell different advisors at different companies the details that need to be in place as soon as possible. At Market Advisory Group, we take the weight off your shoulders. Our financial advisors can talk to our estate attorneys, our healthcare advisors can talk to our tax professionals, and we can quickly cross all the T's and dot all the I's so that you can focus on the more important things in life. If you're worried about your retirement plan, Market Advisory Group can help put your mind at ease. Reach out to set up a 15-minute phone call at 833-MAG-REPORT. And be sure and check out our website at ionretirement.com. There you can watch past episodes or even submit a question for us to possibly answer on a future show. We'll be back with more Ion Retirement, and it comes your way right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors. All in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you. to get you answers in real time, to help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, and welcome back into Ion Retirement. Jonathan, in the first segment, we were talking about Lou and Barb. We'll continue that conversation. They're continuing to work for a few more years. And one interesting fact is that they have no children or immediate heirs for their assets. So how do you help in a situation like that?
Well, the key point is asking the right questions. They did not come to talk to a financial advisor or tax professionals to consider things in their estate plan, but it's the natural part of our process to ask who gets all of the things that you've worked so hard to save and build if something happens to both of you tomorrow. If you get run over by a car walking down the sidewalk as you leave our office, what's going to happen with all of this stuff that you've accumulated, your home, your retirement assets, so on and so forth? And they sort of stopped me in my tracks and said, well, that's another area we've been stuck. We weren't really prepared to talk about it today, but we have no kids. We have a few charities that we make some small donations to over time, but we've had that conversation a couple of times and sort of just left it smoldering in terms of we know there's something that we need to do because we don't have that typical family situation that, yes, it's going to go 50-50 to 2 children. Some of those situations are simple, but even with different family dynamics, even if you have kids or direct beneficiaries, how are those assets going to benefit that person without, steamrolling them tax-wise, without, if you've got family members with special needs, so on and so forth, how are those assets designed to make sure that they're not removing benefits or negatively impacting your beneficiary situation? But very simply, in this circumstance, they just didn't know where to start because they didn't know what was going to happen with their stuff, or they didn't have an intent, they hadn't thought through it. And those are the questions, that simple Q&A process that triggers us to get Doug and the team at Eidelman Law Firm involved in this whole process from the beginning.
Doug Chowder, estate planning attorney with Eidelman Law Firm. When you come across individuals or couples who have a unique family situation, such as having no children or having estranged family members, etc., how do you handle the estate planning process?
Well, and you mentioned having estranged children, and every once in a while we even have folks that come in and talk about wanting to disinherit children, which creates a whole set of complications on its own. But in the case of Lou and Barb, their issue was that they had no children and had questions about who was going to handle some of the roles in their estate planning, which is very frequent that we run into this type of situation. Folks are either don't have any children or family is in different places where there's not anybody close by. And it presents a question of, on a power of attorney or healthcare directives, who would you put into place for that? And sometimes it is a relative who's a sibling or a niece or nephew that's many states away. Sometimes it's a friend who's close by or a member of their social group or their church or something like that that steps in to take over those roles. But it is something that needs to be considered. And like we talk about often, as life changes and situations happen, that needs to be built into the plan.
Jonathan brought up something very poignant, Doug, and that was the word charities. How do charities fit into estate planning?
Well, in a case like this, where especially when the folks don't have children themselves, a lot of times charitable giving is part of their strategy. And that can be charitable giving during their lifetime, that can be charitable giving after they pass away. And it, again, involves a situation where all of us have to kind of get together and talk about, because there are some different tax implications. Now, generally speaking, a donation to charity is not going to have an adverse effect on their taxes. But there are some different types of planning that can be involved where a person can set up certain types of trusts where they can draw income on and move some of their assets that have accumulated in retirement accounts and move those with a much smaller tax effect than they would if they were just taking the money out ordinarily. So those types of things we consider with market tax services and go through and review their situations. The other thing that folks have is the question of whether or not they're going to give gifts while they're alive or if it's going to be something that happens afterwards. So there are an amount of annual gifts that folks can give where they can reduce their amount of taxable income down the road and help to offset some of those things. So we talk with folks about that.
Jonathan, no two situations are ever the same in retirement planning. I had a client just this past week that sat with me and had shared the fact that it was a larger non-qualified account that had been brought over here. And the statement that the client made was, I never pictured myself being alive for the sale of these stocks. I fully had expected that these would pass to my children. They would receive a stepped up basis, but here we are. I mean, life changes and you don't know what you don't know until you get there.
Right, and sometimes it takes someone knowledgeable enough to show you the benefits of strategy changes like that, especially when, that has some obvious estate planning implications as well as tax implications, investment recommendation implications. All of these things are so closely tied together, but most folks we find struggling with, you hire an estate planning attorney, you hire a tax department or a tax company, you hire a financial advisor, you're having to run around and play the game of telephone and interpret all of this sophisticated language and communication from one professional to the next. Who's really working for who at that point? If you're paying these folks fees and salaries and whatever it may be to get the service, and they're only able to provide a very small slice of the pie in terms of getting you the whole picture for financial management, it's that communication between the departments here that we're looking to do the absolute best job possible. I need the advice from these other departments. Even though people come to me for advice, we need help as well.
Are you approaching the peak of your retirement savings? Or maybe you've already started your descent into retirement and feel like you haven't solidified your footing yet. Market Advisory Group can help you find your way down the mountain. If you'd like to set up a 15-minute call with Market Advisory Group, our operators are standing by right now to take your call at 833-MAG-REPORT. And be sure and check out our website at ionretirement.com. There's more of the show coming your way, and we'll be right back with it right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Hi, and welcome back in to the final segment of this week's episode of Ion Retirement. Jonathan, we've been visiting about Lou and Barb in the first two segments and how the different aspects of retirement planning have come into play. We've talked about estate planning. We've talked about tax planning. How does their health health insurance situation impact their retirement strategy?
Well, most folks we talk to, and Lou and Barb in this circumstance are no exception to the rule, that a lot of people just need to know the timeline, because we hear all the time, you know, if you don't do certain things with Medicare at the right time, there could be penalties and other costs to Medicare that otherwise wouldn't exist if you don't do things at the right time. Well, ultimately, in this case, Lou is several years older than Barb. Barb's planning on retiring next year prior to age 65 and can't get Medicare for a few years. Lou is already over 65, but he plans to continue working for a while. So they really needed help just grappling with what does that transition to Medicare look like for them, considering their age difference and the retirement date differences. What does Barb need to do next year, either leveraging Lou's insurance through work or some other sort of bridge coverage? This is always a cost-benefit analysis when it comes to insurance in particular, but that's where Mark and the team at Market Medicare Advisors comes in.
Mark Benefiel, what helpful advice might you have for others in this situation where one spouse may retire prior to Medicare age, yet the other spouse continues to work?
What a lot of people don't realize is there are multiple options out there for that non-retiring spouse. We may look at extending COBRA coverage if they have that offer to them. We could look at ACA plans perhaps, and we help folks with those. And then also one of the most popular ways to continue that coverage is to move over to the spouse's coverage.
Is there some special type of cost-benefit analysis that you can do for clients that helps them in making these decisions?
A good part of what we'll do on a daily basis, myself and the other advisors, is to sit down with somebody and look at their individual plans that they may have if they're going to continue on with their spouse's plan. Perhaps we will look at the deductibles, we'll look at the co-pays, we'll look at all the different things that they have within the plan, and usually it comes into focus pretty quickly that oftentimes, especially if they're with a larger employer, that those plans are superior to what they might be able to get on the open market from a cost-benefit standpoint. If it's a little bit smaller employer, say under 100 employees, oftentimes Medicare or even sometimes ACA options are more cost-effective than what they can get. But one of the first things we usually look at is if there is a non-retiring spouse, to look at that non-retiring spouse plan and see if that's the best option. In a lot of cases it is, but we'd love to have the opportunity to show people where those cost savings are.
You know, Jonathan, when we think of the retirement process leading up to retirement, the planning, I just get this picture of the pebble dropping into the pond and all the little ripples that right. causes going out. Mm-hmm. People that might be out there viewing the show and they're working with a financial advisor, one of the questions I ask a lot of time in first consultations, and it amazes me at the number of people that don't have the answer, is what type of fees are you paying your current advisor?
Right. And it's a result of most of the time it's not discussed. Over the years, internally from an industry perspective, the requirement of disclosure of fees has only very recently become even a topic of conversation. Does anyone else in your life that you hire for a job never tell you what their services are going to cost? It's as simple as that, and that's part of our consultation process, by the way, is we can peel back the layers of the onion inside of your portfolio from a risk-reward perspective, look at the internal costs of the investments your advisor has put you in, as well as the external costs, which is what is the advisor actually being paid for the service of managing your money. And as we hit on in the previous segment, you have to think about it's not just the cost, but what are you getting for that cost? What is the service you're receiving? You know, if your grocery store is going to sell you the groceries, but then they're going to deliver them to your home for free, they're going to call you ahead of time and ask you, what are you running out of? What can we deliver for you for free? You don't expect that type of service from a grocery store, right? And ultimately, from a financial management perspective, when we review people's internal and external expenses of their portfolio, we're finding they're paying a higher fee than what we typically charge our clients, and we're able to incorporate every single aspect of financial planning that's necessary to make sure that you're not going to run out of money and that you can live the lifestyle that you want. Your healthcare is going to be taken care of. The IRS is going to be able to be kept at a far enough arm's reach to where it's not costing you unnecessary money. And your beneficiaries will benefit in the long run from how you've managed your money while you're alive. So thinking about what are you paying for what you're getting, it starts with what are you paying? It's a very pertinent question most people don't know the answer to.
And then if you want to do the math out from there, if you're just working with an advisor, then what are you paying a CPA to handle the tax questions? What are you paying an estate planning attorney? to handle the estate planning. So there's a lot of components that come together.
And the ongoing review and service process that goes along with it, that it can all add up to a very costly process when you're looking to piecemeal that between different professionals.
No matter how good your retirement plan is, there will always be surprises that come and knock the wind out of your retirement sails. And it helps to have a whole team on your side, ready to pivot when things happen. At Market Advisory Group, that's exactly what we do. And if you'd like to set up a 15-minute call to see what you might be missing, just reach out at 833-MAG-REPORT. That's 833-MAG-REPORT. And be sure and check out our website at ionretirement.com. That's all the time we have for this episode. Thanks for tuning in. I'm Rick Everett, along with the entire panel, reminding you that we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Edelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.